So, hello, good students. My name is Brenda, and I'm here to take you through the principles of taxation. And we have a topic here that we're going to tackle, and we are going to learn about the taxation concepts and the regulations in computing tax obligations. So we are going to have the tax concepts and the regulations in computing the tax obligation. And we have the tax evasion. Tax evasion. This is a way that the person paying taxes may not pay the exact tax, or a person who is into taxation but does not pay the government the taxes. So what you should know is that the taxation is part of the public finance that deals in means by which the government raises revenue from the public by imposing taxes. So we will look at why the government evade taxes, all the purposes of the government evading taxes. Where the government is evading taxes, and we find that to maintain economic stability in a country. So through the taxes that the government levies to people, it maintains the stability in the country. Like through the taxes, we can always get wonderful schools, the public schools, and also we can also get the infrastructure that we use, like our roads. So it helps to maintain the stability of the country. Stability of the country. We also have the government uses the taxes to achieve reasonable allocation of resources in a country. Just like I've said, the government uses the taxes to promote the infrastructure and the building of public schools and the public assets that the people in the country uses. So we also have the government uses taxes to increase employment rate. There was a time we had the Kazi kwa Vijana initiative, which the government had brought in the country to make sure that the youth are capable of finding employment and they get their income. So also the government levies taxes for social welfare. So the taxes are imposed on harmful commodities like the wines, the cigarettes, the alcohols, that discourages the consumption of these harmful commodities. So the government may levy a lot of huge amount of taxes on those harmful commodities so that the lives of the people should not be put at risk. So we also have the fair distribution of income, and in that, in any country, some people will be rich and others are poor due to climatic or limited opportunities, numerous hindrances becoming in the country. So purposes to promote employment opportunities opportunities. Then the also purpose of the government evading taxes to protect the health of its citizens, It also promotes taxation to ensure stability of the country, to also achieve reasonable allocation of resources. Achieve reasonable allocation of resources. There is also fair distribution of income to all the counties. So there is fair distribution of income, fair distribution of income. So this allows the government to promote its citizens and to also to support its citizens. So there is also what we know as tax system. What is tax system? Tax system is an organized way in which the government collects the tax from the citizens. So the tax system, we've said it's an organized way in which the government collects taxes from its citizens. That is, it involves the various approaches, structure, and policies adapted over time and relating to the taxation and revenue generation. So we have the tax system, which is a way in which the government collects its taxes, a way that the government uses to collect revenue or tax, which is their revenue. So we have different types of tax systems. We have two types of tax systems, and we have the unified tax system and the multiple tax system. The unified tax system and the multiple tax system. So let's look at the two. So the unified or the single tax system is also called the single tax system, which has only one form of tax. That means the tax that is collected in unified tax is the tax that is fixed. Example, we have the 16% levy on VAT. So that is one of the unified tax system. Like, it only contains one form of tax. Like, all the people contribute VAT at a rate of 16%. So we also have multiple tax system. This comprises of variety of taxes that are applied at the same time. That means on the income of a person, we have different taxes. We have different taxes on the income of a person, and that means this person, the employee, should always pay the personal tax, the corporation tax, the custom, and the excise tax. So multiple tax system, it has many forms. It's in many forms compared to the unified tax system. We have the excise duty. We have the custom, also the custom duty. customs duty and the excise duty. We also have the personal tax and the corporation tax. Personal tax and the corporation tax. Corporation tax, which is a multiple tax system. So with this in mind, let's go ahead and look at the principles or characteristics of a good tax system. Tax system, the way the government uses to collect the revenue or the tax. So characteristics of a good tax system. Characteristics. Let's look at the characteristics of good tax system. So this way in which the government uses to collect taxes. So how should it be? How should be the tax system be, the characteristics? So we have flexibility. This means that the tax system should be easy to change, and when the needs of people arises, it also needs to change according to the needs of the citizens. So the processes should be easy. So number one, should have flexibility. It should be flexible. Flexibility should be flexible. It should also be simple. Simplicity. That means the tax system should be easy to follow and easy to compute the tax payable. So the tax system should be simple. It should have simplicity. That means the government might say that every business to charge a VAT of 16%. So that means it's simple. At least as a business, you need to know how the VAT is calculated. We have the VAT input and the VAT output. So it should be simple, just like the ones we have. The tax system should be simple. Let's look at the other one. The tax system should be certain. So that means the method of calculating the tax should be certain at the same time and at the same place. So even in the next year to come, the business should be able to compute its taxes, because the tax system should be certainty. It should be certain. The tax system should be certain. It should not be changing over time. You find that today we have a VAT of 16%, tomorrow we have 17%, the other day we have 18%. No, the tax system of the government should be certain. So another characteristic, the tax system should be convenient. The tax system should be convenient. That means the taxpayers should be required to pay tax when they have money. So should be convenient. The tax system should be convenient. It should be convenient to every business and to every employee, that when he gets money, when he or she gets money, he needs to pay the tax. So from the business, the VAT should be convenient, even when the business has made sales. And in the employment income, we need to have a convenient pay, or the pay as you want. It should be convenient to every employee and employer. So economically, the characteristics of a good tax system should be economical. Should be economical. This means that the government should always charge taxes according to the economy, how the economy is. And that means it should be cheaper on the taxpayer rather than on the government. So a good tax system must be cheap to operate with and also cost effective. So it should be economical, it should be cost effective. You can't charge a lot of taxes to just some small things, some small sales or some small commodities. You have to charge taxes according to the standards of the goods and the economy of the country. So all these are the characteristics of a good tax system. So we also have the classification of taxes. So we have the classification of taxes. Classification of taxes. So taxes are classified in different ways. Taxes are classified in 2 ways, and that means there's classification of taxes according to the base. There's classification of taxes according to the base. We also have classification of taxes according to the rate. Classification of taxes according to the rate. Classification according to the base and according to the rate. So let's look at classification. We also have the classification according to the incidence. So we have the 3 classification of taxes, and we need to see how the ones that they are classified according to the base, the ones that are classified according to the rate, and the types of taxes classified according to the incidence. So we will start with the incidence just here. We have the incidence tax is the final resting place. This is the final tax. It is the final tax. So our the taxes classified under incidence are our final taxes, and that means we have an example. We have the example of direct tax. Direct tax. We have the direct taxes. We have the direct taxes, and the examples are the withholding tax, withholding taxes, which are paid to the government here by the business, the withholding tax on the sale of commodities. We also have the corporate taxes. We have the corporate taxes. Corporate taxes. We also have the payee. Payee is the pay as you earn, is the direct tax. The direct tax charged on an employee but paid by the employer. So these are our taxes charged, our incident taxes, which are also the direct taxes. We have the advantages of the direct taxes, and we have the direct taxes are easy to understand and operate with. So the government levies these taxes, and it puts certain the categories of people who are supposed to pay taxes according to the amount that they earn. So it's easy to understand. The system is also certain, so it doesn't vary with time, but it's certain that this year this particular tax is supposed to be taxed on the employee. So it is certain, the direct tax. We also say it is flexible, since the government can be able to adjust the tax according to the rate and when the need arises. So it is flexible, it's adjustable. The direct tax is adjustable, it is flexible. So, and it's also economical. The characteristics will say here. So they are also the advantages of the incident tax, which is our direct taxes. We also have the disadvantages of the direct taxes, and we say point number 1, we have it affects taxpayers' ability to save. It affects taxpayers' ability to save. So with the levy of taxes, you as an employee, you've planned your money, your salary at the end of the month. When you get your salary, it's deducted the taxes, the pay and the taxes, and the taxable income, tax payable. So you end up not saving the amount you planned to. So we also have another disadvantage, and it is high income tax. Sometimes the income becomes high, mostly on the people who have a low income. So when they are deducted the taxes, it becomes so hard for them to meet their needs. We also have the high business taxes reduces investment and may result in capital flight. So that's understandable. The high business taxes may reduce the investment of incomes. So those are our direct taxes. We will learn about the indirect taxes. Our indirect taxes. Indirect taxes. We learn about our indirect taxes, what they are. So we have incidences in indirect taxes. Incidences in our indirect taxes. That said, we have the indirect taxes. These are the taxes reviewed on expenditure. They are taxes reviewed on expenditure. Unlike the direct taxes, which are our final tax. So the taxes reviewed on expenditure, we have the VAT, we have the custom duty and the excise duty. So our indirect taxes, we have the custom duty, excise duty, we also have the value added tax, the VAT. We also have the VAT, which is our type of indirect taxes. So we have advantages of these indirect taxes. The advantages of our indirect taxes, they are also our incidence type of taxes. So we have the advantages, and the indirect taxes can be used to protect local industries from cheap imports. So the VAT charged on our goods, our imports, so they are meant to protect our local industries. So as a country, we need to promote our local industries with their sales of goods. So we need to promote them so that we can also grow as a country. So number 2, the indirect taxes can be used to stimulate national demand. So national demand, let's say we have a demand of masks in our country. So the indirect tax are the ones which will be used to stimulate the national demand. So by imposing indirect taxes on our expenditure, we will get the masks that the country needs. So point number 3, we can also be used to control inflation. So we all know about inflation, and that means the indirect tax will help us to control the revenues and the expenditure. The country can also be used for social media purposes, for social purposes, to discourage consumption. Okay, so the taxes, the indirect taxes can also be used to discourage harmful consumption of harmful products. So the government levies taxes to protect the citizens by imposing heavy taxes on the harmful products. So we also have the disadvantages of the indirect tax. So everything that has advantages it also has some disadvantages. We have the indirect taxes. They are complicated to understand. Sometimes you may not, you may wonder why where your money has gone by the charge of VAT, the money of the business. So it's complicated to understand. Number 2, an increase in the indirect taxes causes inflation. So that means the economy goes high, and the people, as compared to the money in the country or in your pocket. So that increases inflation. This means even right now in Kenya, we are facing inflation. And that brings us to the indirect taxes. So the government cannot be able to predict with certainty how much money it will raise through the indirect taxes. So they are difficult to even be certain that the indirect taxes will increase the government revenue. So it is difficult to analyze the economic effects of the indirect tax, since the burden cannot be shifted. So the indirect taxes, they are there. They have their advantages and their disadvantages. So we have the other classification of the taxes according to the base. So classification of the taxes according to the base. So here in the base we have the income tax. We also have the VAT. The income tax, we also have the VAT. We also have the custom duty. We also have another excise duty here, according to base excise. Excise duty, tax charged according to, classified according to base. And just like we've said, income tax is tax imposed on annual gains or profits earned by individuals or the employees, the limited companies, the businesses, and other organizations, e.g. the payee is also part of the base classification of taxes according to the base. So we also have the VAT, which is the tax imposed on supply of commodities and services introduced in Kenya with effect from 1st January 1990. So the VAT is also part of the base taxes. We also have custom duty, which is the tax imposed on import or export of commodities. So tax imposed on imports and exports of commodities. So that is the custom duty. We also have the excise duty, which is the tax imposed on commodities produced by local or imported goods, e.g. the luxuries and the commodities that are determined to health. So those are our taxes classified according to the base. So we are going to look at the taxes classified according to the rate. We have the progressive taxes, the proportional taxes, the regressive taxes, and the digressive taxes. So the rate tax, we have here the progressive taxes. We have the regressive taxes. We also have the proportional taxes, proportional taxes. We also have the fourth one, which is the digressive taxes. So we look at them. The progressive taxes. This is a type tax system that is designed to put the greatest tax burden on those who earn higher income. So our progressive taxes states that the more you earn, the more you will pay the taxes. So that means the rich will pay more taxes than the poor. So that's our progressive taxes. We also have proportional taxes. The proportional taxes states that the tax remains constant on all the people, like the charge of the corporate tax on the companies, which is always 30%. So it's constant on all the companies. We also have proportional taxes. We've said the proportional taxes, they are constant. That means 30% on all the limited companies, all the companies. Progressive, the rich pay higher taxes. The rich pay higher taxes. The poor pay less taxes. So we also have the regressive taxes. The regressive taxes, these are tax that decreases as the level of income increases. So as the level of income decreases, the tax also decreases. The higher the income, the lower the tax. The higher the income, the lower the tax. So that is regressive taxes. Digressive taxes means that the system is first progressive, then it becomes proportional at the level of income. So those are our taxes classified according to the rates. They are classified according to the rate and base incidence. Yeah, so those are our taxes. We also have the incidence of a tax. Incidence of a tax. Let's look at the incidence. Incidence of a tax. What's incidence of a tax? My good students, we should all know the incidence of a tax, and this means it is a direct money. It is a direct money burden of the tax. So it deals with the person who pays the taxes. So it deals with the taxpayer. deals with the taxpayer, which is the incidence of a tax. That is our incidence of a tax that deals with the taxpayer. We also have the key terms in tax, and we have the effects of tax. Effect of a tax. So effect of a tax refers to the real burden of both the tax, the direct tax and the indirect tax. That means the real burden of the tax of the direct and the indirect taxes. Yeah. So this is the real burden of the indirect taxes. And importance of tax incidence. What does tax incidence do? So the burden of tax to the taxpayers, the importance is that it helps to identify reactions and reputations of any tax. It helps to identify the reactions and reputations of every tax, of any tax. So that means there is always a repercussion of the taxpayers when they avoid paying taxes, when they evade taxes. So another importance, it also ensures that there is an equitable distribution of the tax burden according to who pays burden. It ensures that there is an equitable distribution of the tax burden according to who pays the tax. So it ensures that there is equality of the people who are paying the taxes. That means the larger the company, the more the taxes it pays. So that's an importance. The government also needs to know who ultimately bears the money burden of any tax, which shows the final resting point of any tax. So through the government taking taxes from the companies, the businesses, this always makes sure that the government knows who always bears the money burden of that tax. So that's another importance. We look at the factors determining tax incidence. Tax incidence. We have the factors determining the tax incidence. We have the press. That means the burden can only take place through a change in press. The press is very important factor, since if the price is unchanged, the tax does not shift. So the press helps in determining the tax incidence of the taxpayers. We also have time. The government also knows the time in which the tax should be paid. The taxpayer should pay the tax. So that's the time. That's called the tax point. The time in which taxpayer should always pay taxes. The tax points. So we have the nature of tax. So the tax incidence is determined by the nature of tax. That should be it classifies the taxes according to the final tax and the indirect and the direct taxes. So it helps in determine the nature of the tax. We also have the market form. Due to competitive markets, the government is able to, through the incidents, the government is able to locate the taxes in which they are supposed to be levied from the market of the business. So those are the factors determining the tax incidence. So we have tax shifting. We will learn about what tax shifting is, and we will look at our notes that we've sent to you. So we will look at tax shifting, the forward shifting, the backward shifting, and all those. So in our next lesson, we will look at the tax shifting. So thank you, students, for your time, and let's see each other in our next lesson.